Good morning, folks. Thank you for being here. Thank you for watching at home. This is 10/13 record week on multiple levels. And we will power through about 100 tickers today. And I'll start with only QQQ. I'll have a strategy video tonight. The strategy video last Sunday was helpful to me, at least. Kept things framed, especially the new way I'm representing. This is an old way that I'm going back to, representing the SPX, for example, within the ranges that the market makers are expecting with the purple boxes. We'll do that again. I have nothing to say about the indices except about this guy, which is the QQQ, is about a 2% away from the all-time high. Are they really going to stop short of that? So the default is up, and the target is a new all-time high, and the soldiers we all know, the top 6 or 7 companies on the planet. The banks cannot affect this one. The XLV cannot affect that one, so it's all about the mega caps or not. Last week, I put 2 on the pedestal. Definitely one of them delivered, the other one tried. So let's jump into it. The first stock is the other one. The first one, of course, is NVIDIA. The stock in question is Apple. I said there are there are 2 high-profile people that I know of that have been touting 240. They put it a target. They're going to try to go for it, and they fell short last week. It showed promise, so let's see if we can get you some details on that one. And technically speaking, it is stuck in between sellers and buyers. So below you have buyers, above you have sellers. So if the bulls want to maintain the opportunity to get to 240 into the earnings, they need to stay above 221, the turquoise line. They have a lot of buyers in between. I think if you lose to 221, then climbing back up is going to be pretty tough. On the way up, I think it has a lot of sellers into 231.5. So that's what I'm looking at. I don't know if we have any catalyst this week. The bond market's closed on Monday. We'll see what happens. The narrative. Okay, I will in the video tonight. I will talk about the geopolitics, and it's still a very bad scenario, and it's global, and anything can happen at any point in time. Meanwhile, the situation in the U.S., I don't think is being represented correctly, intentional or not. You look at these companies; they're all doing great, like amazingly well. And then you talk to people on the street, and they're not. They're either in high debt, and a lot of people are starting to question the job market as well, and the real estate market, although nothing is tangible. All the reports from the government tell us, we have a soft landing. I doubt it. We've got something else going on. I don't know how to describe it. Just be mindful of that. So Apple is doing great, needs new leadership, but you know that story. ABBV. Look at it. It doesn't get any more symmetrical. Where are my lines? I'm having gremlins today, in case you didn't notice. Okay, you can't make it any more symmetrical than this. You have sellers above, buyers below. I think it's going to be hard breaking out of 200. It's going to be hard losing 189. But I don't know if there are... earnings in 12 days. So maybe that'll break the tide. Let me zoom out a little bit. Oh, there are my lines. Whew. Okay, so this is a NOPE, N-O-P-E, not an obvious point of entry. I'll probably say that to a lot of stocks. This guy got a good bounce. It was a buy earlier, not here. For the same reason, this is support. This should be resistance. So if you're looking to go long, I think you missed an easy entry. Wait for the next dip below 124, 125. You can see how they're going higher with large buy the dip swings. So if you're one of those hopeful that it can get to 152, I guess that would be your secondary exit. This blue box should be Fort Knox, in my opinion. It was an inverse cup and handle that played out perfectly. And that green M is bullish, but I think it started from a lower perspective. So I think the target is close to 140. So how much money can you make between here and then? If you can put that to work, go for it. Adobe, we discussed this live, if you were in the live room at any point in time this week. It was a good opportunity to buy the dip in Adobe. It might have a swing higher. Now you have to pay attention to a couple things. One, I think 520 plus or minus should be a lot of resistance. I know it's $30 higher from here, but percentage-wise, it's not that far. And also, it may have already lost a strong support zone. Market Structure Edge is a private party software that says, hey, every time you buy it, when it's a 1, it should be a good thing, and this is a 1. I don't know if I would buy calls. Shares okay. Shares and selling covered calls okay. Selling puts to own shares okay. Selling a credit put spread also okay. Seasonally speaking, also it might be conducive from my buddy Raghu, so we'll see. Autodesk, if you've waited to go, I mean, what are we asking here, to be honest? This is a place where it's failed before. Look left twice. Now, on a weekly basis, which is what this is, Sean, this is a cup and handle looking thing, which is bullish. So yes, it could get to $310 and beyond. This is a weekly chart, meaning where's the rush? If you waited this long, you could still make money. If you're a momentum buyer, go for it. If you don't know you are a momentum buyer, have you traded the same ticker twice in one day? If not, then maybe you're not a momentum buyer. It's not for me. How about buy the dip closer to 260? Align, I don't know. I mean, it's falling into support. Look at these candles right here. They were support, held well, and it's testing it again. And there's backup support. So from an investment perspective, this is not an obvious point of exit. And it could be an entry, partial, because you also have the overall market. And you also have a lot of sellers above. So if I were to invest in this company, I could start here, especially if I can sell some puts instead of buying shares or calls. If I own shares, I'm not adding here. It's not a bad situation. It's falling into support. AMD, the easy work has been done. Now it's become bearish. It's rallied sharply. It looks like a breakout, and it's rallying into a prior fail. And it has developed some bearish patterns. So at some point I said, I bet we will go to 1 before we go to 2, and we did both. We went to 1, that was correct, and then we went to 2. That's also correct. Therefore, it is not a starting point. This week, it might rally a little bit, but if I'm scalping, if I'm holding calls, if I bought them last week, I would scalp as opposed to say, okay, this is a good starting point for 3 or 5 years. I think, you know, NVIDIA is just eating everybody's lunch, and when it's done eating, I think the market will correct and take everybody with it. So from an investment perspective, I'm not rushing in here, especially not with calls. That would be my least favorite thing to do. Amazon, running into resistance. It hit my target, the letter T, and now it's bouncing off into what caused it to get to my target. So I would anticipate them struggling to get to 193, for example. This would be not an entry point for me. If anything, it's an exit point. And if somebody wants, if I had shares, I would sell covered calls. Now, if you tell me Amazon can take out 196 with force, I tell you it's going to the moon. But I don't think this is that kind of company situation right now. It's a giant now. It's no longer well, unless they're working on something and they say, oh, we've invented the internet part 2 or something, where another source of income comes out of nowhere, like AWS was. All right, so I guess Amazon had its NVIDIA moment back then when they found a new source of income that was massive. Arista, we said buy the dip at every dip. This is not one of them. What are we asking here? It's going to the moon and beyond. It's not for me. As far as an investment, no way on earth I would chase a stock this high for an investment. If you're in it for the long term, then I would question the reason to get into it now. I don't want to tell you what to do, but if I waited this long and I jump in now, that's purely emotional. No logic to it. Same here. Same here. I tried puts with this one with conversation with you guys, and I regret the minute I did that. Clearly, it didn't work. I sold puts against them and all of that. It was still a loss. So I will never look at this ticker again, ever. Great P&L, by the way, so far. I forgot what they do. Mobile marketing platform. I don't understand it. I don't know where it's headed or how high it can go. It's this is a weekly chart. So if every candle is 1 month, clearly it's in a breakout, mega breakout. Eventually it'll fall when, I have no idea, and the fall could be painful, regardless of the fact that it has a good financial set of papers. So it's in the breakout mode, the moon. AVGO, okay, so this looks like a breakout. A great company. We bought the dip in this one. The P&L looks fake. It's so good. Although, I don't know what this is. Why is it negative suddenly? Net income, a couple of billion. Maybe they bought something. Or they overspent on something. So I wouldn't chase it here. I would buy the dip. Again, same concept, right? If you're an investor and you're waited so long. So this is not wrong yet. They're just starting from a higher perspective. In other words, there's a good scenario of it being at 172 again. Short-term comments, if not 162 or 52. So I would put an alert. I'm going to put an alert from myself. So when I have a watch list, I'm working watch list, and a good stock does something extraordinary, I take it out of the watch list and I put an alert where it goes back to normal, or a place where I can do something with it. Up here, I wouldn't. I would want to short it, and I don't want to. It's a great company with a great stock and a super strong market. If you force me, I would sell a call and buy a put spread out in time. But I don't want to do that, so I would just not do anything. Boeing, I wouldn't even go along this company. I usually would. Actually, I would sell puts in the 120s. In fact, let me add it to my list. It's already there. So we knew back here that something was going to happen. We didn't know up or down. Down was the decision, right? But in the process, they lost like 163, 162, and that was important. And how important was it? Well, they tried to regain tear. So I tell you one thing. This company needs a headline ASAP that would bring it up to 168 or 65 for whatever, because they're desperate for that. Otherwise, they're going to drift lower. And now they're starting to put in place some bearish scenarios that could give the machines low targets, unreasonably low targets. Like, why are we at the 2022 problem zones? It is a good support zone, but why are we there and the markets are breaking into high heaven? What happens if the market's correct 5 or 10%? What happens to this one? Pretty scary stuff. So the business is intact. It's one of two companies that can do what they do, period, end of story. So I'm not worried about their sales. I'm just worried about their stock price action. It is a better long than a short down here, but I'm asking a lot of rhetorical whys. BABA, I would short it, and in fact, I did short it. I shared an FXI short, and it's working well, especially if you sold some puts against the puts you bought. Instead of shorting just Alibaba, I shorted the whole thing by buying puts in the FXI. The reason why the stock looks like this is because China has fired the mother of all bazookas as far as stimulus for their economy. They're panicking, and I'm asking why. Anyway, this is too high, too fast. You could say this about every Chinese company. PDD, JD, this one, you name it. So I chose FXI. For BABA, if they don't take out 114, they're probably going to 100 or 102. BITO, that represents crypto, but not 100%. It is not crypto spot price. It's a company that trades. Look how closely these candles are to my ghost pattern that I placed multiple times. Same pattern, rinse and repeat. This is a ticker that we made a lot of money with. So you know me and the story with crypto. I think we have a big move coming. It's either at 90,000 plus or at the low 40s. And I think we should get down before we go up. And I would be buying dips, especially in this one. The good thing about this one, when it's doing well, it pays a huge dividend. So if you bought it first with me, you now own it free and clear because of all the dividend it pays. I wouldn't buy it for the dividend because it's not promised. They only share profits. So if they're doing well, usually that happens when BITO is up and Bitcoin is up, then they share in the profits. Read the perspective. It's pretty scary. From a chart perspective, there's a lot of sellers at 19 and some at 18.50. And if the buyers fail at 16, it goes to 13.50. Simple as that. I did enter, by the way. We sold puts back here, and I said repeat the entry, and I was never assigned. Actually, I said sell a put spread. These puts that we bought at 15 were sacrifice puts. And I would repeat it here at the risk of getting assigned shares in the low teens. Bros, good P&L, coffee. 35.50 looks like a lot of resistance and technically would be a breakout to 40, but I think it would need a headline. Right now, I would be worried about the support. It does have a lot of it, but I would be worried about the support. 28.50 or lower, 27. Looks like a floor. It better hold. 24 days until earnings. Otherwise, you can see how big of a head and shoulders that would be, right? Shoulder, head, shoulder. If we lose the white line, those arrows are almost a guarantee. But that is a big, big if. Those white lines should be bulletproof. And the opposite should be on top, so it's kind of stuck. I don't know what this is. Too small for me to deal with. It looks like you have two fails. If you take those out, you go to the moon, but that's not a stock I would test. Technically, what are you asking me? Short it? You can short it with a tight stop. Go long it? Not for me. Oh, before I forget. The idea is somebody's asking, why am I using a 2-hour chart? And I don't use that in the live room because in the live room, we're trading minute to minute. Why would I use a 2-hour chart? Here, I'm doing homework for somebody that's at home. Okay, another note I forgot to mention earlier. One of you is submitting a bunch of tickers under fake names. We're all grown up here. If you do that, I'm going to ignore all of them. First of all, you give me a fake email on the form. Second of all, you give me a fake name. Give me a fake email and a real name. I can deal with that if you want privacy. But to give me a fake email and a fake name, that's childish. I will not review your tickers. I don't care who you are. BWA, a big seller above. I don't think they can take that out. If they do, they can get to 40. Otherwise, buy the dip. BYD, this is a Chinese company. I think China has a disaster coming along in its economy. I'm not an expert. Do your own homework. Okay, talking about this chart. Rallied, dropped, rallied, dropped, rallied. I would imagine they drop. The question is, can they hold 58, 59? If they can, then maybe they can get to 72. I don't want to start longs into 66, 67, and 8. They look like pretty tough spots. The company's huge, by the way. If Warren Buffett invests in it, you know it's a good company. I don't trust anything coming out of there. Car, who is this? Avis, yeah. I don't know how these guys are in business, all of them, Avis. I think they're all the same company anyway, I'm not sure. I don't know what was that all about. When a P&L looks like this and the stock does this, I walk away. This is GME schmutz. I wouldn't touch this company for an investment for all the money in the world. If you're investing in this company, you have to deal with the GME folks. If you're okay with that, then go long. Technically speaking, it is a base. It is a support. It is a better entry than an exit. Descending wedge and all of this. Remember, the market looks like this, and it looks like that. What happens when the market does this? What happens to this stock? Goes to what? 30, 20? I don't know. So I wouldn't invest in it. Trading it, descending wedge, usually break out. 90 plus gets you buyers. Okay, what's the question here? This is not an obvious entry point. The P&L looks a lot better. The company is coming back from a really weird situation. If I'm long, I could stay long. If I'm starting longs, I mean, my arrow looks perfect. You know, the bowl, they did the bowl 2 or 3 times, and now they're breaking out. But if I look left, it's pretty scary what's coming up as far as resistance. I wouldn't short it, but I wouldn't start longs here. If I'm long, I would sell covered calls. CELH. I would have exited on this spike, to be honest. But my thought process was way back then. We took a trade that went sour, and it was one of two. I said I would take half of a position, and if I get assigned, I would sit on them. And I would double it when I feel like I've lost half my money and then sit on it for an investment for a long time. And that's what I would do. The P&L is still okay. The promise of growth is still there. So if it was an investment and I took half of a position, I would not add I would decide whether to exit or not, and I probably would have left it on the spike for myself or sold really aggressive calls covered by my shares. If you need more than this information, let me know. I closed my, where is this Colgate? Yes. I closed my short on Colgate and it paid. And I think over the long term, it would still be good. If it pops back up to my letter R, I would reshort it, but I didn't. So this week, if it comes back into the R, I would reshort it. The only reason I closed it is because it fell into a really good trend, and I'm short Coca-Cola, which we'll probably get to later. I did not close my Coke short. It's doing really well, but I did leave this one. Also, I had sold some covered puts that were a challenge, and I didn't want to take a loss on those, so I booked the profit. Chipotle, we bought the dip. I wouldn't touch it here. It's rallying into a prior fail. This is the top of the earnings reaction, blah, blah, blah. No old CEOs, supposedly it's a superstar and left, so I leave room for error. It's a good company so far. I wouldn't short it. I just wouldn't start longs here. I would buy the dip again. Coin, we have a lot of people shorting coin and a couple of people long coin. So it looks like a battle, right? So this was my forecast. They're here. They're still stalling. Technically, they hit target 1.5 of that red W. So if they don't go out of it, the bulls want to trigger 184. I think they need to show me you can get to 185 with strength, then I would worry about the breakout of 192. Otherwise, I would treat 192 as an exit. So if I'm long, I'm trailing. If I'm short, I would stay in it a couple more ticks and see what happens. This one follows the price of Bitcoin, so there's always that variable. Costco, great company. I said not an obvious point of entry, and that was correct. And I'm also positive that if the stock market is higher in the future, this company will do well. So I'm not shorting it fundamentally at all. I would fade the next rally as well. I see rallying into 3 lower highs, but they also have higher lows over a long period of time. They hit our target here at one point. So it is vulnerable. Here are the big moves. If you lose 867, you're going to test the low 800s. And, the moon, if you break out of the 2 yellow lines are still the play, and the bull is still the same. You have huge sellers above and huge buyers below. If you take out the, I'm going to change them. I'm making so I can speak color. If you take out the green line, you get to the yellow circle. And you better hold the 8667, the yellow line. There's no indication it wouldn't, but if you lose it, it's going to feel very painful. I wouldn't hold calls. CRM, I wouldn't hold calls. I wouldn't hold shares. If I bought a trade, I'm out. This is the letter R. It stays there. The letter R is still there. Resistance zone, yes. It's pushing up against a great company, good management historically, and I would buy the dip. The closer to 268, 270, the better. From an investment point, I would sell puts to own shares. I would not buy shares here. And if I do, I wouldn't buy more than 20 or 30% of my position. CrowdStrike. So confused. I'm so confused. You guys dumped all over it, seeing even Microsoft spoke about it, the largest disruption, technological disruption, and we've had the Y2K scare, and they're giving it a pass. If you bought the dip and you're not out here, why are you asking me? You just have unlimited amount of risk appetite. If I bought the dip, I would have been out miles ago. I think this company goes back to 250 this year, if not early next year. So if I'm an investor, I'm going to be patient. If I'm a trader, I would sell a call spread. Be aware, though, there might be a headline that causes another spike. The headline would be they settled and it's X billions. So once they know the number, Wall Street moves past it. You don't want a headline that says they're looking into it in a criminal way or something, but it's been a while. So the odds of that are nil. Anyway, it's not an easy entry point here. CVX, I would be a short up here. If I bought the dip, I would exit here. I don't have a trade on CVX, but if you force me, I would sell a call spread. And they are headline prone, so I wouldn't do that. If you're an investor, then there's nothing to do, even though there's a seller. This yellow, anything around this yellow line should be a selling zone and a red line. And look at it. It was a prior support, and now it's going into it. It should present some resistance. No comment. I mean, what's the question? Go long? Go long. I don't, not for me. Buy the dip. The closer to 312, the better. If you can get below 300, that'd be amazing. DELL, if you bought the dip, I shared the dip buying opportunity, but I don't like it for me. This would be my exit point. This could be a breakout in the making at the letter R2, and it could go to 148, but the easy work has been done. I only want to trade this guy easy, if at all, and I would be out. I own a DELL and I freaking hate it. I know I'm not the one paying their bills. It's more likely large clients, but I will never buy DELL again. I said it before, and this time I mean it, because before I only paid $800 for my rig. This one is $3,500, and it's crap. Do not buy a DELL. Support sucks. Machine phantom problems, and support doesn't want to help. They do, but they make it so difficult that you just give up, and I did. I gave up. I'll live with it. DNOW, I don't know what this is. Energy products. Okay. I don't know what it does. This is a support zone that extends through 11, and anything above 14 should be resistance. What was it? What is with these tickers? I mean, how do you guys find these tickers? Okay, what is this one? Distribution of maintenance and repair products, industrial, commercial, institutional. Okay. Good trend. Buy the dip. It seems like the closer to 35 or 34, the better. It could get to 42. Make sure you know if you're a trader or investor. Also, make sure that your overall assumption, this goes to all stocks. The overall assumption is that the markets are going to the moon. The minute that changes, the bids disappear from a lot of companies. And I don't know, DNOW or DS, whatever that was, DGR, DSGR. I don't know how they behave in a downtrend. Right now we have moonshot. What happens when the moonshot ends? Okay, just make sure you know if you're a trader or you're an investor. Devon was a good entry point, in my opinion. It's a good company. And now it's not a good entry point. It's going into a prior ledge. Anything above 45 should be a struggle. So if you bought the dip for an investment, you did well. Just hold on to it and enjoy whatever it provides for you. DXCM is still a buy the dip opportunity, but I think I missed the good entry. So this was my ghost pattern, and it's playing out perfectly. So I don't want to ride it all the way down. I think there's a lot of resistance above. So the easy bounce has happened. I would buy the dip below 67, would be 67.50. The closer to 67.50, the better. I don't know if it'll give me an entry at 65, but that would be a good place to get it. So maybe sell puts to own shares. If the P&L on paper looks pretty good, so that would be a good thing to do. With that, we end video number 1.